Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at how the portfolios are performing. We give stocks buy, sell, and hold ratings and watch what performs the best. So far that has been the hold, and it hits the hold when a few different criteria are met, or a few different things can put it on the hold list. It could be that it is an overvalued stock, but I do not see a reason to sell it. That's the case for the Microsofts and the Nvidias. So let's actually go into this and take a look at it. We see we got 4 dividends coming up on these stocks. And total gainers, Microsoft and Nvidia are 2 where that is the reason. Estee Lauder was not quite down into the buy range, but it looked like they could have a nice bounce back once China opens up, and I kind of missed the boat on that one because I was waiting for it to go down to the buy range, and that's what you get when you try and time things. There are other cases like 3M where it's very undervalued, but it is not the type of stock that we could consider to be quality. So, I don't want to give it a sell because in the short term, it's going to likely bounce back, make a little bit of money. But in the longer term, it's going to catch up to this value. So maybe once I evaluate it again next time, it'll become a sell. But for now, it's a hold. AbbVie, I want to reevaluate come earnings time, and that one will be interesting. AAP, kind of along the same lines as 3M. Coke, I thought it was overvalued and that the fundamentals weren't really giving a reason to sell. It's a quality company. It's a brand everybody knows, the most recognized brand in the world, but it's sold down from those high valuations. So I was right. I have played it with some call credit spreads and made a little bit of profit here and there. I think I make like $50 a month off of Coca-Cola. 3M, I've been betting on it staying above the $100 range, kind of with a 95, 90 put credit spread, and I've been making some decent money doing that. And I keep these lists. If I would need a trade idea, I come and I look at what list is it on and why is it on there. And usually it's pretty easy to make profit when I do that. So we see that it performs about the same as the market, just to a lesser degree. It's got a very similar shape, but a lot smaller. Yahoo Finance, so they use analyst data here, say that 3 are overvalued, 2 are at near value, and 3 are undervalued. And then we can go to the sells. So these are they're not quality companies, or they're just insanely overvalued. And this one's kind of mixed on the results. AMD is almost all of the value. It's up $26.77. This portfolio is up 14. So if you take AMD out, this portfolio is definitely a sell portfolio. I mean, the next biggest gainer is Texas Instruments, $1.23. Look into my video on that if you want to know why it's on this list. I sold out of my position. I am not mad about it. So what? It's up 1%. I didn't get the absolute top, but no one can ever time the markets perfectly. AT&T being the worst performer here is no surprise. Too much debt, not a quality company. And so Yahoo Finance kind of agrees with me on these. They say 7 are overvalued, 2 are near fair value. I'm curious on what those 2 are. I don't want to dig in too deeply. I'm sure it's Altria and Leggett & Platt. Both those companies, I'd say if you're just looking at the fair value, yes. But if you look at the trends, they're not quality companies and not something that you'd really want to be holding long term. Now we go to the buys. The buys are in the green. And we see that it doesn't really perform like SPY does. It's kind of doing its own thing, which is interesting. I mean, I want to build this portfolio up over time. And we see that the results here are mixed as well. Half green, half red. GGG is the leader here, up almost 10%, which is great. Tyson up 5%. I've been making some money off Tyson by doing put credit spreads, banking on it staying above $50. I think I do a 49, 50, 49 put credit spread or something along those lines, and making money weekly off that one. Kroger, it had risen up. The earnings, people didn't like how there was lower sales, but the fact that the margins were higher, to me, is definitely a reason to buy more. So I've been buying more. It's that $45 area is definitely the buy zone. So I just bought some shares this morning, and I'm writing a put. And also, they rose their dividend. So they just decided to raise their dividend 12%. So coming back, we see IIIN is down just slightly, almost negligible. I am writing a put on that one. Actually, because of the low volumes on the stock, you can get some nice premium on the puts. So right now, a $30 put is paying out almost $100 in premium, which is very nice because you're getting 3 shares for free if you do get assigned on it. You're saving yourself. Let's see, the current share price is $31.61. So if this stock tanks, it goes below $30, you get assigned on your put. Your average cost on these shares is essentially $29. And if you would have just straight up bought with cash today, your average cost would be $31.61. So that's why I like to sell puts when I have the cash for it. Do I think I'm going to get assigned? No, I don't think this stock is going to dip down below $30, but that's a free $100. I could throw it into shares. I could do something else with it. Vici, I'm not sure why Vici is down. It has massive potential from what I see. It's just a short-term thing. I mean, I own 100 shares now. I'm making money off my covered calls. I made $15 off of it in the last week. So like I keep telling you guys, I'm trying to find ways to bring cash into the portfolio off of these stocks. Once I can categorize it, I can strategize and I can make trades. I can collect dividends. I can do a few different ways to get that cash flow. And I have a whole video on that also. Realty income's the same way. It's just commercial real estate right now is, there's a lot of talk about loans needing to be refinanced and coming due. So there's a lot of negative press about the commercial real estate space. That's probably unwarranted, especially for these companies. So I'm just going to buy them up while the prices are down. And then finally, we have Eastman Chemical, down almost 7%. It's one of those. I'm, again, not quite sure why it's down. I don't see any big stories down here about it. It's just the market's kind of shunning it, which is fine. I mean, I'll buy it more. I had looked at the charts. I figured that it wouldn't go above $85, so I opened some call credit spreads, and I think I'm at max profit on that call credit spread that I had opened right now. And so I'm just going to walk away with some money in $41, which is more than half the share right now. So I'll just use that to buy more. Yahoo Finance kind of agrees with us on these ones. 3 are overvalued, 2 at fair value, 3 undervalued. So I'd be curious to see what those 3 overvalued stocks would be. Looks like GGG is one of them, 10% overvalued. That's exactly how much it's up right now. So I will definitely be reevaluating that one next quarter. I mean, I like the potential that I saw there. They think that Realty Income is overvalued. They're probably thinking that Vici is as well. These REITs are just a different beast. There's something very different You can't use the traditional. Yep. And Vici is the other one. So I completely disagree with the Realty Income and the Vici valuations. I mean, if you were to go straight off the numbers, yes, but they're real estate investment trusts. So just think about it as if you're part of a group owning these businesses. You have owning these properties, and you have a management company who is handling everything for you. And they pay pretty nicely. I'm pretty happy with how things are going. The sales are just being propped up by AMD. That honestly should be negative. It should be the worst performer here. The buys are being drawn down by the commercial real estate scare, which means I'm just buying more. And it'll turn around in the long run. This will probably become the best performer. And the holds are really just being propped up by those companies where the market is liking them right now, where I think that they're overvalued, but I don't see a reason to sell out of them. And I know that there are some stocks that are missing from this. I don't have Zim down. I don't have some of the other stocks that I've been over in the last week, BTI. But I reviewed those so recently that their numbers likely haven't changed too much. So next update, they'll be there. I just wanted to do a quick update here and let you guys know how and why we are classifying the stocks. And I think that I might start doing a weekly recap and game plan where I'll take a look at how things have done in the prior week, looking at the different sectors, and then where I am going to be trading, buying, whatever. While Tyson is down at that $50 level, I'm going to be doing put credit spreads. And while 3M is trading about that $100 level, I'm going to be doing put credit spreads. So you guys will get a better picture of how to bring more cash into your portfolio to buy the stocks that you want to, or to do more trades without having an insane amount of risk. I mean, everything that I do has defined risk, and I'm typically looking at a 75% probability profit or more. So the risk of me being assigned is pretty low. And even if I ever am, typically it's something that I want to be assigned on. Like some of the covered calls that I do, you know, I wouldn't mind selling out if it were to hit a certain price. The puts, I want to get into IIN, but you know, I don't see enough reason to just buy shares right now. There's not anything in the chart showing me that it's going to go for a run. It's actually looking a little bearish. So I'm capitalizing off that bearishness, getting a little bit more cash, buying myself some more time. Please subscribe if you want to follow how all of these are performing, and leave a like if you enjoyed the video, if you learned anything, and I'll catch you next time.